But with continued uncertainty over Trump's tariff policy, can today's gains hold? And that is kind of where we talk about the desk here, guys. Is this something where we are still in a regime of buying dips or selling rallies, or can you even generalize that? Karen, I'll start with you.
So what I did today is, Friday we thought, oh, maybe there'll be a really nice rally, and then it sort of faded over the weekend. And what I did today was I'm always long, but I looked to collar some of my positions, right? So that we've had a lot of volatility. So, and still the collars skew to the upside, meaning you can sell a call and buy a put and for flat, but have the put be a lot closer to the money. So it's sort of a way of taking off some risk. So I did that. It was so the rally wasn't shocking that it was sort of faded and ended up being. I was actually a little bit surprised that it ended up as well as it did. I'm not quite sure if anything happened in the last half hour to make it fade or just sort of the weight of it. I don't know. But it is a tremendous time of uncertainty. I'm not a buyer or a seller with the VIX right here.
Guy, I've spoken to a number of folks who characterize this market as trading, quote unquote, heavy. That's a term that a lot of traders use oftentimes in this business to kind of denote this idea that things may feel like they can drift lower. Is that your feeling right now, or do you feel this is a balance that we can say, hey, maybe there's constructive elements to it?
Well, being heavy myself, Dom, welcome, by the way.
Thank you.
Great to have
you for being here. Yeah, thanks for being here with us.
I agree with that. Listen, the recent low was 48.35, let's say. The all-time high was made in February, 61.47. 5,500-ish is a 50% retracement of that range. We've talked about the potential to go there, and basically here we are now. But to Karen's point, with the VIX north of 30, you're going to see action like this. And I get everybody wants to talk about the tariffs. Megan's going to come on and talk about it, I'm sure, in a couple minutes. But the reality is the market doesn't really have any valuation support. And that $270 of earnings that the street was looking for is a pipe dream. And if you get 250, you might be lucky. And then you say, in that type of environment, if things are slowing down, what's the right multiple? So you can play the math game. And I still think the market's expensive here, despite the sell-off over the last couple of weeks.
Yeah, listen, just look at Apple and look at NVIDIA, right? So they gapped up, and they just got faded from the get-go. The high of the day, was the open, and that's not particularly good price action, especially on a day you saw the 10-year yield come in at one point, like 8 or 9 bips. It was trading 440 or something like that. We got up to 460 at one point last week. The dollar has no bounce to it. And, the other thing that I found kind of concerning today is that you had the staples, utilities, and telcos. They outperformed the S&P 500 today. So what does that tell you about the way investors feel about how heavy this market is if they're willing to kind of plow into those groups after they've shown relative strength over the last few weeks or so? And there just doesn't seem to be a lot of commitment to the prior leadership. Now, one thing I will say, as a silver lining guy on the desk, I thought the money center banks traded pretty well today.
Wow,
I think J.P. Morgan, took a little digestion after a big day
run
on Friday. The thing that I would worry about is if one or two, if Citi or Bank of America put up numbers or the sort of commentary that Wells Fargo did, I think the banks are done. I don't mean done. But I think they probably come in and at some point they test the lows over the last 2 weeks. So if you're searching for new leadership and you liked what acted well today, again, telcos, utilities, and staples, you're probably not getting what you want.